Most UK business owners work hard, they make decent money, but they still miss out on real generational wealth. Why? Because often they have the wrong structure in place. There's a setup quietly used by the top 1% to protect their wealth, to invest tax efficiently, and to pass it down for generations without paying a penny to HMRC. It's called a group structure, and it might be the single most powerful tool that you're not using yet. Today I'm going to show you exactly how the structure works, how it's set up, and more importantly, why this could be the key towards you building generational wealth. My name's Rayhan, and I help business owners make more money and pay less tax. Over the years, I've seen countless business owners pay thousands more in tax than they need to, simply because they're not aware of the tax planning opportunities that are out there. If you're making good money, but you don't feel like you're building wealth that you can pass down to your children, this video is for you. Here's what's happening. You're running a business, you're making good cash flow, maybe paying yourself 6 figures a year. But when you look at your overall wealth and asset position, something feels off. You're paying huge amounts in corporation tax, in personal tax when you pay yourself that money. You want to invest in property and other assets, but you feel like everything you do results in another massive tax bill. The problem isn't that you're not making enough money, it's that you're not able to use that money tax efficiently to compound and build wealth, invest in assets, and not give it all away to the tax man. You're trapped in a single company structure that creates tax friction every time you want to make a move. And this is exactly why informed business owners are using holding companies and group structures. Before you think this is just for massive corporations, you are completely wrong. This is for anybody who is serious about building wealth. A group structure is essentially a family of companies rather than one single company. Each member of that family has specific roles and purposes. Letting you break down exactly how this works with an example. Your holding company up top is also called a parent company. It holds shares in all of your other companies. It doesn't trade, it just holds investments. Then you have your trading company. This is where your actual business operates. If you're in a marketing agency, this is the business that holds client contracts, that takes in revenue, pays your team, and generates a profit. This is what most business owners have. It's just one company. And then you have your investment company. And here's where it gets interesting. You can have one or more companies in your group that are purely there to hold investments, whether that's stocks and shares, property, or crypto. They exist purely to help you build wealth with whichever assets you want. Now here's the magic. When your trading company in the group generates a profit, it can pay those profits up to the holding company completely tax-free. The holding company can then invest those profits back into an investment company to allow you to buy assets, creating a nice tax-free environment for profits to move from trading into investments. That means you don't need to extract the money personally, pay super high income tax rates when you're investing in assets and building wealth. And this is where the real wealth building begins. Let's say you buy a rental property through one of your investment companies for £300,000. That rental property will generate rental income over time, which is held within your group and taxed at corporation tax rates, not income tax rates, but also say appreciates to £500,000 and you sell it, that £200,000 gain is now subject to corp tax rather than personal tax. You can then reinvest those gains within the group into new assets and start the cycle again. There's no personal tax implications for all of this investing activity. And when you do this over and over again, you benefit from the law of compounding. You're not losing money to significant taxes at every transaction point. Therefore, your wealth is compounding much quicker. Money that would have gone to HMRC is instead within your vehicle, building wealth for future generations. So now let's look further down the line. You've used this structure for a number of years to build generational wealth that's compounding. Now it's time to plan on how that gets handed down to future generations without being subject to super high inheritance tax rates. Firstly, you need to understand that when a person passes down shares in a company, they are taxed very differently for inheritance tax purposes compared to somebody passing down personally owned assets. Why? Because business relief applies. That means more of what you built, which is represented by these shares you hold in your holding company, is passed down. In addition to inheritance planning and the opportunity that comes from having certain business reliefs, then we can consider succession planning. If you want to bring your children into the family business over time, you can do that much easier with a holding company and a group structure. In this setup, you can gift shares in your holding company over a period of time to your children. This can also be done tax-free by leveraging your annual allowances and other reliefs, potentially including business relief. Your children can become shareholders in the family business without disrupting the day-to-day operations of the trading company or the investments. And of course, this also gives you flexibility. Maybe some of your children do not want a part in the family business and others want to be heavily involved. With a group structure, you can accommodate different family members' needs really easily. Beyond wealth building and generational tax planning, there's other benefits to having this structure in place for you today. The first is loss relief. If one company in the group makes a loss in a year, you can transfer that loss to another company in the group to offset against their profits and therefore help them pay less tax. This can't happen if you have separate companies that are not connected. Second is better cash flow management. You can move cash from companies within the group very easily, which means if one company requires cash flow, it doesn't have to go externally. Instead, you can use your group structure to redistribute your assets. Next is risk protection. If something goes wrong with your trading business, say it gets sued, the assets that you have in your other investment companies are completely separate and protected. If you want to sell one of your businesses, you can do this from the group structure by selling shares in just that one company, leaving you with a clean position holding the rest of your investment companies, as well as opening the door for reliefs that can mean you sell that business and pay 0% tax on the sale. So that covers everything you need to know about group structures and why you might want to put this in place today to help you with exit planning, with generational wealth building, and with protection of your assets. Now, I need to be clear about something. This is not a DIY project. The amounts of tax involved are huge, and if you get the structuring wrong, it can cost you far more than you planned to save. You also need to consider costs involved. When you set this structure up, you will have higher accounting fees because you have more companies that require filing. You will have more complexity in administration. However, generally speaking, if you're making 6 figures or more in profit and you're going to use this group structure to invest in assets and build generational wealth, the costs will be far outweighed by the benefits and tax savings you get. And finally, you need to think about timing. The longer you wait to set this structure up, the more costly it can be, both from a professional fees point of view and a tax point of view, because you need to transfer a company into a holding structure which can trigger capital gains and stamp duty based on the value of that company at that point in time. If you want to speak to an expert about how a group structure can help you pay less tax, use the link in the description below to book a call with the team. In addition to that, if you found this video useful, give it a thumbs up and subscribe to my channel for more content like this.